EFG Hermes posts an 18% Q1 profit rise, and Saudi's non-oil exports rose 12.8% in March. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Egypt-based EFG Hermes saw its Q1 net profit rise by 18% to $18.6 million. Revenues for the quarter grew by 55% year-on-year to $102.5 million. Its investment banking and brokerage divisions boosted sell-side revenues to a record 61% year-on-year rise to $26.7 million for Q1. Similarly, the investment banking division's revenue grew by 52% year-on-year to $3.5 million, while its brokerage division recorded $23.1 million. Saudi's non-oil exports rose 12.8% to $19.6 billion in March, with China taking 17.3% of total exports, making it the kingdom's biggest trade partner, followed by India with 11.3% and Japan with 10.9%. Official data shows exports of chemical or allied industry products shot up by 65.6% to $1.1 billion. They comprised 36.7% of non-oil exports. Plastics and rubber rose 5.5% to $107 million. They comprised 28.2% of non-oil exports. India has capped sugar exports to safeguard its own supplies and to ease inflation, days after a ban on wheat shipments sent global prices soaring. India is the world's largest sugar producer and the #2 exporter after Brazil. It says shipments will be limited to 10 million tons for the current marketing year to September. India is citing inflation and its own food security needs after it also banned wheat exports. Twitter will face skeptical shareholders today during its annual shareholder meeting, as doubts remain over whether it will complete its deal to be acquired by Elon Musk at the agreed-upon price. The Tesla chief executive tweeted on May 13th that the $44 billion acquisition was temporarily on hold, while he sought more information about the proportion of fake accounts on Twitter. Twitter last week said it remains committed to the deal at the agreed price. However, investors appear unconvinced. Meanwhile, at Amazon's annual shareholder meeting today, it will face 14 investor resolutions challenging its policies. It's a record for Amazon as socially minded investors scrutinize its treatment of workers. The increase in the number of resolutions underscores the rise of environmental, social, and corporate governance-based investing. This is spurring more shareholders to push for corporate accountability. Meanwhile, Amazon has opened its first brick-and-mortar clothing retail store as people start to venture out to shop following the easing of COVID-19 curbs. The store, Amazon Style, sits in Los Angeles. It uses machine learning technology to help customers find clothes and personalize recommendations. Customers shopping on the Amazon app will also have the option to try out their selections at the physical store and will be notified on the fitting room's availability. Automaker Stellantis and South Korean battery maker Samsung SDI are investing $2.5 billion in a new joint venture battery manufacturing project in Kokoma, Indiana. The plant is set to start in 2025, and the investment could gradually rise to $3.1 billion. Samsung owns 51% of the JV, while Stellantis has the remaining 49% stake. Pfizer says it will sell its patented drugs on a not-for-profit basis to the world's poorest countries as part of a new initiative announced at the World Economic Forum. Pfizer said the time is now to begin closing the gap between people with access to the latest treatments and those who are going without. The initiative focuses on 5 areas: infectious diseases, cancer, inflammation, rare diseases, and women's health, where Pfizer currently holds 23 patents. And it's official, the UK government has approved the sale of Chelsea Football Club to a consortium led by American investor Todd Boehly for $5.3 billion. Earlier this month, the group agreed to take over the club from the Russian billionaire Roman Abramovich. He put the club on the market before being sanctioned. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. See you tomorrow.